Next concept is regarding valuation of material issues. Valuation of material issues. Valuation of material issues. Material issues means what? Material issues means what? From issuing material from store to production. Issuing material from store to production is called material issues. But material we are issuing now. So what will happen is, right. So let's say on a particular day, day 1, we have purchased 100 units. Okay, at rupees 5. That means 500 units are there with us. Day 7, we purchased 200 units. At rupees 6 per unit, we have 12,000. Correct value. So 100 units we purchased at 5, 200 units we purchased at 6, and day 10 we purchased 300 units at 7. Okay. Day 11 we issued 500 units. Issued 500 units of stock to the production. So now what is the value of the material given to them? What is the value of the material given to them? So based on the valuation method, you have to take the value. Okay. So which inventory will be given? We have 600 units of stock. Just the price increased. All the stock is one only. One and the same one. Same type of stock, same type, same material, same quality. But the price got increased. Price got increased because there is a fluctuation in price. It will be going higher, lower and all. So it will be happening there. So in such cases, so what will be the cost to be given to the material? It may be issue or it may be to the closing stock. Okay. So what will be the? So for that we have different methods. Okay. We have different methods. So we have FIFO method. So what is the material which we have purchased first? That cost has to be given. See here 500 units we are issuing. So for the first 100 units we will give 5 rupees. Next to 200 6 rupees. So in this how much you will use? 200 we will use. Out of 300 we will use 200. Because in order to match 500 requirement, no. 100 is there, 200 is there, remaining 200 from this stock. So 200 into 7. So then you will have a value. So what will be the closing stock then? 100 units of 7 rupees each will be closing stock. So that is what is called FIFO method. This has its own advantages, this has its own disadvantages. One advantage or disadvantages are there. So next, at the same time, if you use a LIFO method, which is last in first term. So that means whatever the material you are receiving afresh. Okay, so that material has to be given first. Okay, so 300, we need 500. So day 10 stock has to be given 300 into 7. Day 7 stock has to be given 200 into 6. This will be issued. So what will be the closing stock then? 100 units of the first day stock will be the closing stock. So in the reverse order we are coming. This is what is LIFO. This has its own advantage, own disadvantage. So whenever you are going for FIFO, now what will happen? You will be giving the lower price material first. That means what will happen? Your material cost will come down. It will show. It will show as lower cost. So as a result, what will happen? Your profit will be higher, inflated. Now, so if you use LIFO, what will happen? So when the prices are rising, your cost will be higher. That means as a result, in the P&L, your profits will be lower. Okay. So using LIFO method, that will be the advantage, that will be the disadvantage. But whenever you are using LIFO method, no, so it will be matching with the current market prices because you are using the latest materials rate, no. So that's why it will show you the current market price. But whenever the material usage is more, obviously you have to go to back days material. So that will be the disadvantage or advantage, right? So this has its own advantage, own disadvantage. At the same time, we have another method which is average pricing method, which is nothing but just the average of the prices. 5 plus 6 plus 7 by 3. Then you will have a price. That price we have to have. Okay. But irrespective of the number of units we have to take. That is what is average price. Irrespective of the number of units. So this is 100, this is 200, this is 300. You have to average the price. 5 plus 6 plus 7 by 3. That is average pricing. Weighted average pricing is one such method where we will take the weight of the units also. So how you will arrive at the cost means 100 into 5 plus 200 into 6 plus 300 into 7. You will get weighted average value divided by total number of units. You will get what? A different price. That is what is called weighted average price. We will calculate anyway. Okay, so these are the different methods in which you will value the material issues. Value the material. Based on that, what will happen? Obviously, your closing stock will be different from FIFO method to LIFO to weighted average to average. Obviously, our closing stock will be different. Material cost will be different. Material cost will be different. But you cannot change the receipt, purchase. Purchase price will not be changed. That is not in your hands. Issue. Issue means what? Allocation. What price you are giving to the material. What price you are giving to the material. At what value you are valuing the closing stock. At what value you are valuing the closing. That will differ based on the method you adopt. So accounting policy is also there on this. FIFO method is there, LIFO is there, average is, weighted average is there. At the same time, so we have other methods also, market price method. That means whatever the purchase price it may be, at what purchase price you may purchase, but what is the current market price of the material, that has to be taken. That is market price. Okay, whatever the purchase price it may be, what price will be given to this material if you sell it as it is now? That is what is realizable value. Realizable value. Market price is different. See, what is the price now? That is market price. See, this material is there now. In that replacement means what? So, this is the pen which I have purchased long back. It's been 6 months. That is in my stock. Okay, that is in my stock. So, what is the market price means what? What is the market price means what? Today's price of this pen. Today's price of this pen. So if I lost this pen, what I have to do? I have to replace. I have to replace. So what is my replacement cost? Will be the market value. What is my replacement? I don't value this one because it's been 6 months. It is got depreciated. I have used it. Okay. So efficiency got reduced. All these are separate. So what is my replacement? If I lost this now, what is my replacement? If I want this now, what is my replacement? That is what is market price. Based on market price. So if I sell this, what value I am getting? That is what is a realizable value. This is also a different method. This is also different. Okay. So these methods will be adapted for what? A valuation of material cost. Valuation of material cost. At what price we are using the material, or what price of the material has to be taken in the production cost. That is the. So what is the cost of closing stock? What is the cost of closing stock? At what value you have to value the closing stock? There is an accounting policy where you will study the accounting standard for valuation of the inventories also. So closing stock will be there. Obviously, it is an asset at the end of the year. Okay, obviously it is an asset at the end of the year. At the end of the year, what value has to be shown in the balance sheet? Okay, if you take LIFO method, there will be one value. If you take FIFO method, there will be one value. If you take weighted average, there will be one. So what value you have to take? There is a policy on it. That means you cannot change the policy, or you cannot adopt the policy whatever you want. Okay, there may be some option whether you go for FIFO or weighted average, net realizable value method, cost method. There is a method for it, but actually LIFO method is eliminated from that. So the LIFO method is not given to you. Like it is not the option for you. LIFO method for valuation of the inventory in the books of accounts. You got this? So see, these are the different methods of inventory valuation. Okay, right? Valuation of material issues. So materials issued from stores should be priced at a value at which they are carried in the stock. At which they are carried in the stock. But there can be situation where the material may have been purchased at different times and at different prices. At different prices with varying discounts. Correct? We have purchased at 5, we have purchased at 6, we have purchased at 7 and all. With varying prices. See, whenever the prices are inflating, I told these points, please. LIFO profit will be lesser. LIFO, FIFO it will be higher. And the prices are increasing. Inflating prices. When the prices are decreasing, it will be vice versa. Okay, so the different prices with varying discount, taxes, etc. Because of this problem arises as to how the material issues to the production are to be valued. Because there are fluctuation in the prices, then how it has to be valued. So the stock is same, material is same, quality is same, but the value or the price is same, different. So in such cases, what price has to be given? So there are several methods for tackling this situation. The cost accountant should select the proper method based on the following factors. What are the factors to be considered? Frequency of purchases, price fluctuations, and its ranges. So there will be too much fluctuation up. There will be everyday fluctuation up. There will be fluctuation, and that too drastic variation will be there between the prices. So based on that, they have to add frequency of issue of materials. Okay, and relative quantity. How much quantity they are issuing, how much how many times they are issuing, and nature of cost accounting system they are adapting, and nature of the business and type of the product they are dealing in. Okay, and management policy relating to the valuation of the closing stock. Management policy relating to the valuation of the closing stocks. Based on this, they have to take a decision. Cost accountant has to take a decision. So several methods of pricing material issues have been evolved in an attempt to satisfactorily answer the problem. These methods may be grouped and classified as follows. Cost price method. Okay, cost price method, which this method is useful especially when materials are purchased for a specific job and work order. As such, materials are issued subsequently to that specific job or work, or the price at which they are purchased. That means what? It is nothing but just the price, purchase price. At what price you are purchasing, no, that price only you have to take into it. That is what is cost price. Okay, to use this method, it is necessary to store each lot of material separately and maintain it separately. Is it possible all the way? It is not possible for all the industries, for all the organizations. When the material is more and more and more, so stores will be larger in size. In such cases, it is difficult for such segregation of the stock. So today we have purchased a stock that shall be separately maintained. Tomorrow we are purchasing a stock that shall be separately maintained. It is not possible. Obviously, we will mix the material. Okay. So advantages means cost of material is issued for production purpose to specific jobs represent actual and correct cost. At what price we are purchasing, that will represent. This method is best suited for non-standard and specific products. Non-standard and specific products means customizations. Okay, right. And disadvantage it is most difficult method, especially when purchase and issues are numerous. Number of purchases are there, number of issues are there, then it is irrelevant. Okay. Next, FIFO method. So FIFO method is suitable. It is a method of pricing the issues of materials in order in which they are purchased. In what order they are purchased, issue will be in that order. So in other words, materials are issued in the order in which they are arrived at the stores, or items longest in the stock are issued first. So in this method, there is a less chance for obsolescence. Less chance for obsolescence. Whenever you are following last in first out, what will happen? So what are the stocks of purchased at the start? So that will be kept. That will be kept in the store itself. So that means there is a chance for expiry or obsolescence. Okay. So thus each issue of the material only records the purchase price, which does not reflect the current market price. Current market price means market price may be 7 this day, but if you are issuing the first day material at ₹5 each, then it is not obviously reflecting the current market price. This method is considered suitably when the prices are declining, okay, not inflating. So in the falling price, because material cost charged to the production will be high then. Okay, so while the replacement cost of the materials will be low. So but in the case of rising prices, if this method is adopted, charge to the production will be low. As a result, profit will be showing higher. So as compared to the replacement cost, sometimes what we may think, if we adopt a FIFO, so material cost will be shown lesser. As a result, what we will fix? Selling price, lesser selling price we may fix, resulting in loss also. Okay. Consequently, it would be difficult to purchase the same volume of the material as in the current price in future without having additional capital resources. Right. So advantage, disadvantage. Advantage, you see, it is simple to understand and easy to operate. Material cost charged to production represents the actual cost with which the cost of production should have been charged. Actual cost only we will charge. And in case of falling prices, use of this method gives better results. Falling in prices, no inflation. Closing stock, the material will be represented very closely at current market price. Closing stock obviously representing the current market because last day stock, I mean day 10 stock will be valued. Okay, day 1 stock, day 1 to day 9 will be consumed. Last day stock will be in the closing stock. Right, disadvantage, if the price fluctuates frequently, this method may lead to clerical error. Okay, since each issue of the material to production is related to a specific purchase price, okay, the cost charged to the same job are likely to show a variation from the period to period. That means what? So you are allocating on the FIFO basis means what? So same job using the same material will cost one rate. That means 10,000 is the cost of a job. Next time after a month you are valuing again. Okay, same job. Okay, that may come for 12,000 rupees because there is a change in the price. Same quality of the material used, same quantity of the material used, consumption is the same, efficiency same, but what had happened, 12,000 is the cost, difference of 2,000 occurred due to valuation of the material cost. Just by valuing the material cost, the difference is occurring. Okay, right. So in case of rising prices, the real profits of the concern being low. Rising prices, what will happen? If there is a rising price, you are using FIFO, that means old cost you are taking, that means lower cost you are taking. As a result, what will happen? Lower cost means lower material cost. Lower material cost means higher profit. No, so being low, while the profits in the books will appear high. This may lead to inability of the firm to meet the material purchase demand at the current market price. Okay. So okay. See here in this question, there is an application of FIFO method is illustrated below. Application of FIFO method. Can we solve this? Actually, for illustration they have given. Okay, we'll start solving this. Right. So July 3, 13, July 23, August 5, August 6. These are the days on which we made a purchase. We made a purchase. Next, July 8, July 8, 12, 22, 25, and August 8, we have sold out the stock. I mean, sorry, sold out in the sense issued the stock. So that means what? It is not given in chronological order. So now we have to put it in chronological order and then we can sell. Okay, so that means on July 3 you purchased. Later on what happened? On July 12 you have consumed. On July 13 you purchased. On July 22nd consumed. On 23 you purchased. On July 25th you consumed. On August 5th you purchased. 6th you purchased. On August 8th you consumed. Issued. Okay, you consumed. So right. So based on this you have to go for FIFO calculation. Okay. Can we solve this? All right. Okay, so wherever we are solving these questions now, FIFO or LIFO, whatever it may be, so there is a standard format. Generally, it is called as stores ledger. Stores ledger. Ledger, how we will maintain? Opening will be there, purchase will be there, issues, I mean, what we call consumption will be there, closing will be there. Likewise, we will maintain. See here, there will not be any opening. For opening and closing, there will be one column. Opening, closing, right? See here, date is there. Date. Now receipts or purchase. Receipts or purchase. Okay. Next, issues. Issues. Next, closing. Next, closing. Okay, in this quantity will be there, rate will be there, amount will be there. Next, quantity, rate, amount. Next, quantity, rate, amount. Okay, right. So first of all, tell me first date. What is the first date? July
July 3rd.
3rd. 3rd July. What we have done on the day? Purchase as how much? 600 units we purchased. At rupee 1.
Yes.
So amount will be 600. So that means that will be there in the closing stock. Correct? 600 at rupees 1. Amount will be 600. Is this okay? Right. First day done. Now next day what happened? July 8th. Chronological order you have to tell. Irrespective of the transaction. Maybe purchase or maybe issue. July 8th what had happened? Issue. Issue how many units? 400 kgs issued. So which material? We have 600 in stock. That material only we had issued. Okay. Correct? 400 issued. 400 issued. So rate will be 1. 400. Okay. Remaining how many will be there in the stock? 200 will be there. How much will be the rate? 1 or 200 will be the closing stock. Correct? This is the second day. Third day what happened? Next day. July 12th. Purchase a issue again. How much? 200 units issued. Rate will be 1. We have 200, rate we have issued. So we don't have closing stock. Now we don't have stock only. July 12th. Next day. 13?
July 30.
July 30th. Purchase. How many?
800.
800 units. Rate
1.20.
1.20. Then 960 rupees will be the cost. So what will be the closing stock? 800, 1.2, 960 will be closing stock. Okay, right, done. Next is July. What had happened? Issue. How much?
200 kgs.
200 kgs, sir. 600 kgs issued at rupees 1.2. We have 800 only. Only one type of the stock is there. 720 will be the cost. Remaining 200 at rupees 1.2. How much? 240 rupees will be the cost. Is this okay? Next, what happened? July 23. 600. What is the rate? 0.90. What is the cost then? 540 rupees. Okay. So now what will be the closing stock? 200 into 1.2, 240 rupees closing stock will be there. Along with this 600 into 0.9, 540 rupees closing stock will be there. Totally how much? 800 units will be there. 780 rupees worth of material will be there. Correct? Okay. Next, July 25th. 25th. What happened? Issue. How much?
200.
200 units issue. 200 will be out of. We have 800 units out of 1.2 rate. Okay. How much? 240 rupees. Then what will be the closing stock? 600 of 0.9. 540. Okay, next 29. On the same day. So okay. So 200 at rupees 0.9. How much? 180 rupees. Correct? 400 will be the remaining stock. 360 will be the closing stock. Okay. Got it? Right. Next, July 29. July 29. August 5th. What happened on that day? Purchase. How many? 400 units purchase. At rupees 1.1, 440 rupees. So that means closing will be 400 into 0.9 in 360. 400 into 1.1, which is 440. which is totally 800, 800. Okay, next August
6.
purchase. How many? 1200 purchase. 80. How much? 960. So stock will be 400.9360. 400, 1.1, 440. Next 1200, 0.8, 960. That means how many units? 2000 units are there. Okay. What is the value? 800 plus 960, which is 1760. Next, August 8th, issue of how many?
400.
1000. Total 1000. Two issues, sir. 3 issues. How many? 200. So 400 will be 0.9, 360. 400 will be 1.1, 440. 200 will be 0.8, 160. Okay. 800 and 960 rupees is the total value. Okay. Here also you can give the total. How much it will be? 420. Yeah? Okay. So 960. So what will be the closing stock? 1000 of 0.8, which is equals to 800. Okay. Any other? Last this is. So now you can tell what is the purchase cost, what is the material consumed, what is the closing stock. What is the purchase cost? What is the purchase cost? 600, 960, 540, 440, 960, 3500 will be purchase cost. What will be the amount of issues? 960, 420, 720, 400, 200. 2700. Okay. What is the closing stock? 800. 800 is the closing stock. Got it? How many units are there? 1000 units are there. It will be 0. If the same question, if you solve in LIFO method, what will happen? Different prices are there, and that too we cannot say there is a inflation or there is a decline. Mix in no. First we purchased at rupee 1, next 1.2, next later decreased again 0.9, next increased, next decreased. So likewise there is no trend in the prices. So that's why if you use LIFO, there will be some different closing stock, different material consumed. Purchase cost will be same. In both the cases, purchase cost will be same. Okay, and the closing stock number of units will be same again. Number of units will be same, closing stock, but closing stock value will change. You got this? Okay, for this question, for this type of question, this is the standard format which we should use. Okay, right. Right. Next, LIFO method. It is the method of pricing the issues of the materials on the basis of assumption that items of the last batch purchased are first to be issued. Last batch has to be issued first. So under this method, prices of the last batch are used for pricing the issues until it is exhausted and so on. If however the quantity of the issue is more than the quantity of the latest lot, quantity of the issue is more than latest lot, obviously what has to be done? The previous stock has to be touched. See, we have 100 units lot, 200 units lot. When the issue is 250 units, what has to be done? 200 units lot has to be taken first, 6 rupees. 100 units lot, 5 rupees. So 200 into 6 plus 50 into 5 will be the issue. So that's what they are saying. So under this method, okay, so and the prices of the last batch are used for pricing the issues until it is exhausted and so on. If however the quantity of issue is more than the quantity of the last lot, issue is 250, last lot quantity is 200. So issue is more than last lot, then earlier lot, that is 100 units lot, and its price will also be taken into consideration. Got this? Okay. So during inflationary trend, okay, during inflationary trend, what is the advantage? Market prices will be taken into account because we are going in the descending order. Okay, so market prices will be taken into consideration. So raising the prices, the use of LIFO would help to ensure the cost of production determined on the above basis is approximately the current one. So this method is also used especially when there is a feeling that due to use of FIFO or average methods, the profits show and the tax paid are too high. Profits show and paid are too high. So profit will be more in FIFO method. When the prices are inflationary, then only it is. LIFO method, the price cost will be higher and it is equal to market price, and the profit will be lower. As a result, tax will be lower. Advantages: cost of material issued will be either nearer to or reflect the current market price. Thus, cost of goods produced will be related to the trend of market price of material. Such a trend in price of the material enables the matching of cost of production with current sale revenues. They are telling this, but this advantage is there. But still, so unless and until you don't touch the last batch material, this will happen. See, whenever you are touching this 100 units lot is there, no? Then what is the current market price? Current market price is 6. You are taking up 5. For at least for 50 units you are taking. So then matching with the current market price is being diluted, no? Whenever you are going for the last lot. So if you are purchasing 200 units, you are issuing 200 units, then current market price will be maintained. That means as a result, what will happen? The last lots will be there, no? That will become obsolete. That will be maintained, that will become obsolete. Okay. So disadvantage is calculation under LIFO system becomes complicated and cumbersome when frequent purchases are made at highly fluctuating rates. Okay. Next, use of method during the period of rising prices does not reflect undue high profit. Okay. So in case of first in first out or average method, it will show higher profits. So in case of falling price, profit tends to rise due to lower material cost. Falling price, inflation means lower profit. Falling prices means higher profit. Okay. So at the finished products appear to be more competitive and at market price. Over the period, use of LIFO helps to iron out the fluctuations in the profit. So in the period of inflation, LIFO will tend to show the correct profit and thus avoiding paying undue taxes to some extent. And disadvantage: cost of different similar batches of production carried on at the same time may differ a great deal, which we told. In time of falling prices, there will be need for writing of stock value. Falling prices are there means higher rate it will show, higher cost it will show. So that's why writing of the value has to be done. So the cost of the market price, whichever is lower, has to be adopted. And method of valuation of the material is not acceptable in income tax authorities. So if you are showing the inventory, closing stock of the inventory in the books of accounts, it is not accepted by authorities if it is LIFO method. Income tax authorities will not total. Income tax you have to adopt cost, at least cost, or what is the net realizable value. Whichever is lower has to be adopted. Okay. So next. So for valuation of inventories, we have accounting standard 2 and Indian accounting standard Ind AS 2 inventories. Right. So now we have to solve this question. The following transaction in respect of material Y occurred during 6 months ended 30 September 2022. So material Y 6 months data is given. Okay, what had happened? See here. April, May, June, July, August, September 6 months data given. Purchase 200, 300, 425, 475, 500, 600 given. Purchase price. Purchase units. Purchase price is also given 25, 24, 26, 23, 25, 20. So that means prices are declining and then increased and then declined, increased, declined. So that means there is a fluctuation in the price. Okay, next issue units 250 units in the May month, 300, 550, 800, 400 issue. So total units are 2, 3, 5, 5 no, so you got 900, correct? 500, 900, 14 no, 2500, 2500. Okay, so issue units you see 800, 1100, 19, 2300. That means closing stock will be 200 closing stock, correct? Obviously 200 will be a closing stock. What will be the value of the closing stock will differ from LIFO to FIFO, but quantity will be same. And that too, if you see September month material will be in closing stock. If you follow what? LIFO no FIFO. September month. If you follow FIFO, what will be in your closing stock? September month. If you follow FIFO, September month closing stock is there. If you follow LIFO, September will be there or not? No, huh? Will be there or will not be there? In LIFO, September will not be there. Periodically it is correct, but in this case, see, in the month itself we are purchasing 400 units. We are just having 200 only. That means obviously it should be out of the last lot. Whatever the method you follow, correct? Huh? So you are having 400 purchased. At the same time, you just consume 200 out of it. So that means closing stock. Based on the closing stock, I am telling the consumption. Closing stock is 200. So that means obviously out of 200 only that should be left or not. Is it correct or not? Whatever the method may be, LIFO or FIFO, whatever the method may be. See here, September month we purchased 600. September month purchased 600. Issued 400. Closing stock is 200. That means what is happening here? There is no opening from August. There is no closing in August. That means there is no opening brought forward from August to September, correct? Because we purchased 600, issued 400, closing stock is 200. Closing stock is 200, how we are telling? We are not just minusing 600 minus 400, we are not doing that. How we are telling? Total purchase, total consumption. We are taking and then we are arriving at a closing stock of 200, not just 600 minus 400. Okay, so closing stock is there. And that too, your purchases are just sufficient for closing stock and issue. So that means what? There is no opening from your last month. Is this correct? Is this correct? In such a cases, whether you follow LIFO method, whether you follow FIFO method, both will be same for closing stock. Do you understand this? There is no opening. You are just having one type of material only. See, forget about all the remaining months. Why you need to forget? There is no balance from such months. There is no such balance from that month. Okay, so that's why you need to forget all the months. You just have to consider September. In September month, how many transactions are there? Only one. How can you say that? They are telling that purchase units are 600 in September. One transaction. And issue are 400. Closing stock is 200. 600 minus gross closing stock. At the same time, if you consider the entire period, 6 months period, then also you are getting 200 closing stock. So when there is no opening, and that too, one issue, one purchase. Okay, then LIFO method, FIFO method, both will not differ. Both will not differ. Okay, we will see. So that is what the question here. See here, the chief accountant argues that value of the closing stock remains the same no matter which method of pricing of material issues is used. That means LIFO is used or FIFO is used or whatever it may be, closing stock remains the same is the argument of the accountant, CMA. Okay, is the argument of the accountant. Okay, so do you agree with that? Is the question. Do you agree with that? Is the question. So generally speaking, LIFO method, FIFO method, closing stock will differ. Correct or not? But in this case, it will differ or not, you have to check. Wait. So why? Why not? If it is agreed, why? If it is not agreed, why not? Explain detailed stores ledgers are not required, but you have to explain. State when and why would you recommend the LIFO method of pricing material issues. Okay. So now you tell me. Now you tell me. So you can go for a stores ledger. Without detailed stores ledger is not necessary for them, but in order to understand stores ledger is necessary. Okay. So prepare a stores ledger. Okay, month is there. Purchase are there. Okay, quantity, price, amount. Issues are there. Quantity, price, amount. Closing stock or balance is there. Quantity, price, amount. Okay, month April. April month. What is the quantity purchased?
200.
Units purchased. Rate 20, 25. Okay. How much? 5,000. Okay. Issue? Nothing. Nothing. So quantity closing is 200, 25, 5,000 is the closing. Is this okay, April? No. April. May 300 units purchased at 24 rupees. How much? 77,200. Issues are there? How many? First you are going for FIFO. Okay, FIFO. 250 units issued. Correct? So 250 units means from what issue will be made? Out of 200 issue will be made. Correct? 200 into how much? 25. How much? 5,000. Plus out of 300 how many issued? 50 issued. 50 into 24. How much? 12. Okay. So remaining 250 units at 24. How much? 6,000. Done. May is done. Okay. We are just going for closing balance. That's why we don't need to total this. Even we total this also, it is fine. Right. Okay. Now June month. How much is the purchase? 420 at 26. How much? 11,050. Okay. Issues are there? How many?
300.
300. So 300 means 250 into 24, 6,000 plus remaining 50 at 26. How much? 13,000. 13. Okay. So remaining will be 370. How much? at 26. 9750. Okay, June done. July. July, how many units purchased? 47. At 23 rupees. So price is, amount is 10,925. Okay. So issue is 5. That means 375, 26, 9750. And out of 550 remaining 175, 175 units at 23. What will be the amount? 4025. Okay, remaining will be 300 units at 23. How much? 6,900. July. Now August.
500 purchase.
500 purchase. 25 rupees. 7,000. 12,500. Okay. Issues are 800. 800 issue. 800 issue means 300 at 23, 6,000. 500 at 25, 12,500. Okay. Right. So closing will be nil. August done. September
600
600
purchase.
purchase. How many? How at
10
12,000. Okay. Now issues are 400. Obviously this is the material here. 20. How much?
8,000.
8,000. Okay. So 200 remaining at 20. What is the rate? 4,000 will be the closing stock. So closing stock is equals to how much? 4,000. 200 units of 20 each. Is this okay? This is one. Next, if you calculate material cost of issues, you tell me how many units issued? How many units issued? What is the total value? Two 2,500 units are okay. What is the value? Total value is enough. 5,000 plus 1,200 plus 6,000 plus 1,300. 54,675. Okay, right. Purchase cost will be same in both the methods, correct? So this is what FIFO method. This is what FIFO method. Right. So if we follow LIFO method, what is going to happen? Is this okay? Is this okay? Done now so far? Done? Okay. Right. So we will arrange this. Just difference will be in the first column, it is same. Purchase will be same. Okay, April month same. Nothing will change. Correct? There is no issues. There is no issue in the April month. Correct? So May month it will change. May month it will change. Both will change, correct? Okay, from this onwards, issues will change, closing will change. Okay, right. Okay, now tell me, April month is same, correct? May month you tell me 300. What is the issue? What is the issue in May month? 250. 250. No. So 250 from what? Out of 300. Correct? So 250 into 24, how much? 6,000. 6,000. Okay. Next remaining. Huh? Next remaining 50 units will be there. So 200 units of 25 will be there for 5,000. 50 units of 24 will be there. So which is 1200. Okay. Right. Next 425 units are there purchased. Correct? What is the issue? 300 issue. So 300 of 26 will be issued. Now how much? 7,800. Okay. So remaining 200 of 25, 5,000 will be there. 50 of 24, 1,200 will be there. Correct? 425, so out of 425, 125 will be remaining. Of 26 will be there. How much? 3,250. Next, 475 purchased. Now, how much is the issue July month? 550 will be the issue. So, 550 means 475. 475 of 23. How much? 10925. Remaining 125, sorry, 75. 75 will be from 125, correct? 26. How much? 1950. Okay, so balance will be 225, 5,000. 50 of 24, 1,200. 50 of 26, 3250. Sir, 3250, no? Sorry, sir. How much it will be? 1,300. Is this okay? Right. So, how many left? 300 left. So, 300 left, 500 purchased. So, now what will be the issue? 800 issue? 800 issue means 500 of 25. So, how much? 1250. Okay, 50 of 26, 1,300. 50 of 24, 1,200. 200 of 25, 5,000. Okay, right. So no closing stock, correct? Now we have purchased 600. 20 rupees. Issue is 400. At rupees 20. 800, 8,000. 8,000. So balance 200. At rupees 20. So total 4,000. Is it the same closing stock? Same closing stock in LIFO method also. So you calculate the purchase cost. Sorry, purchase cost, not the material cost of issues. What is the material cost of issues? How much? 36,225. Okay. Is it correct? There will be difference, but this much difference will be. Hmm? 6,000, 7,800, 10,000, 40.
3,000.
Okay, but anyway, closing stock is same. So that means what we can make a conclusion that, so whenever there is no opening stock, whenever there is, whenever there is no opening stock, and that too, material purchase and issues are only one single transaction. Correct? So in such a cases, closing stock will be same in FIFO and LIFO method. See here, total number of units purchased is 2,500. Number of units issued is 2,300. That means 200 units are closing stock. So closing stock at the end of 6 months period on 30th September will be 200 units. To the end of August 22, total purchase coincide with the total issues. That means whatever we purchased, so everything got issued. Right. So 1900 units we have purchased. So 1900 units got issued. There was no closing stock by August 22, end of August 22. So in the month of September, 600 units were purchased, 400 units were issued. So there was only one purchase. That too, no multiple purchase, no different prices. Only one price is there. Correct, 600 units at rupees 20 rupees each. That got purchased. So if that is the case, there is only one purchase. That means only one transaction is there. There is no opening. In such a case, LIFO method and FIFO method both shows the same closing stock. So one issue in 1 month of September 22 and there was no opening stock. The closing stock, see, one purchase is there. Multiple issues may be there. Opening stock is 0. Okay, one purchase is there. Multiple issues are there. 200 units, 200 units. Even then also, same. Closing stock will be same. So it is to be valued at rupees 20 per unit. In the view of this, argument of chief accountant appears to be correct. Yes. Right. So where there is only one purchase and one issue in 1 month with no opening stock, the method of pricing of the material issues becomes irrelevant. So that means no opening stock, one purchase, one issue in a month, then there will not be no difference between two different methods of valuation of closing stock. So therefore, in the given case, one should agree with the argument of accountant. Okay. Right. So it may, however, be noted that the argument of chief accountant would not be stand if one finds the value of the closing stock at the end of each month. Each month it is not same. At the end of each month it is not same. Right. So LIFO method. So they have asked for the when and why it should be recommended. LIFO method is recommended, no? So that for that it is the answer you see here. So LIFO method has a edge over FIFO or any other method of pricing material issues due to the following advantages. So cost of the materials is issued. So obviously what are the advantages we have seen? When the inflationary prices are there, then it will be coping up with the market price. So as a result of the market prices, what will happen? It will show the correct material cost, there will be correct profit. So which is generally lower profit, lower taxes. Okay. So use of method during the period of rising prices do not reflect undue high profit. So correct profit will be reflected. So as a result, the correct tax has to be paid. So it was under the FIFO or average method. The profit shown here is relatively lower because the cost of the production take into account the rising trends of the material prices. In the case of falling prices, profit tend to rise due to lower material cost. Yet the finished products appear to be more competitive and are at a market price. So during period of inflation, LIFO will tend to show the correct profit. So and correct taxes. So if not inflationary, and declining trend means in that cases it will show little higher profits. So that is the thing. Okay, so we have, right, we'll stop here. We'll stop here, and then we'll take up tomorrow. We'll have a session. What is it? Right? We are discussing valuation of material issues. There we are discussing FIFO method, LIFO method. Okay, average, weighted average. No. Okay. In that, you have solved some questions, sir.
Yes.
You have solved some questions. Now we are at question number 12 is done, huh? Okay. So now we need to go for question 13. Huh? Question 13. Right. See here, we will take up question 13. We'll take up question 13 regarding LIFO and FIFO methods. Okay, regarding calculation using FIFO, LIFO. Okay, value of the materials consumed during the period, valuation of the stock of the materials as on 15/4/23. Explain why the figures in A and B in part A of this question are different under these two methods of pricing of material issues used. You need not draw up the stores ledgers anyway. Okay, right. The following information is provided by Sunrise Space for the fortnight of April 2023. Okay, material X stock on 1/4/2023 opening stock is given, which is 100 units at 5 per unit. 100 units at 5 per unit. Next purchase on 5/4/23 300 units at 6, 8/4/23 500 units at 7, 12/4/23 600 units at 8. Okay, that means what? The prices are in increasing trend, inflationary we can say. Okay, inflation in the prices 5, 6, 7, 8 as the time progresses. Right. Next, there are issues on 6th 250 units. On 10/4/23 400 units, on 14/4/23 500 units. Okay, right. So that means in the first 15 days of April, only transactions, I mean purchase, receipts and issues have been happened. Right. So obviously we need to put these in chronological order and then we can find out. Right. So now they are asking for calculation under FIFO and LIFO methods of pricing. What we need to calculate? Valuation of the materials has to be made. Valuation of the stock has to be made. Okay, right? Can we do it? Okay. So now tell me simply what shall be done? Just stores ledger. Okay, stores ledger. If you put the format, it will take you some hardly from 5 to 10 minutes, but exactly all the figures will be matched. So there will not be any confusion. Okay, right. So now date we have to take. Okay, date. Next, receipts. 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 In that receipts, what shall be there? Quantity, rate, and amount. Okay, next, after receipts, issues. Okay, for issues also quantity, rate, amount. Lastly, closing balance. Closing balance, quantity, rate, amount. Same format for the valuation under any method. Even if you go for weighted average also, this method, this only. Okay, quantity, rate, quantity, rate, right. So now, what is the date? What is the date on which the first? So first opening stock has to be taken first. So on 1/4/23, 1423. So what is the opening stock? Okay, so opening stock. So how much?
100 units.
100 units are there. At rupees 5. Amount will be 500. So on 1423. Next purchase on. Next purchase on 5th. Next purchase on 5th. So 5, 4, 23. So purchase no receipt. How many units? 300 units at rupees 6. That means 1800. So what will be there in the closing stock then? 100 at 5 each will be 500. 300 at 6 each will be 1800. Okay, so this will be there in the stock. Next on 6th April 23 issues of how many units?
250.
250 units issue is being made. So 250 units means how we need to make the issue? 100 units. Okay, 100 units. So 100 units from opening balance, correct? 100 units from opening balance. Okay, 100 units at 5. How much? 500? 500. Remaining 150 units at 6. Which how much? 900. Totally it will be 1400. 250 materials. 250 units at 1400. Is this okay? So how many are remaining now? 150 units at rupees 6 each. Will be how much?
900.
900. Right, done. Okay, next
8th
on
purchase.
8th again purchase. Next date. So how much? 500 units they purchased at rupees 7. That means 3000. So now what will be the stock? 150 of rupees 6 each, 900 will be the amount. 500 of 7 each will be 3500. Okay, that will be the stock. So now comes the next date. What is that?
10th.
10/4/23 issues made. How much?
400 units.
400 units issues made. So in LIFO method, so 400 units means what to do? 150 units of 6 each. Correct? 150 units of 6 each. And 150 units of 6 each. 900 plus remaining 250 here. 250 units of 7 each. How much? 1750. Okay, 1750. Totally it is coming around 2650. 400 units at 2650. Is this okay? What will be balance then? 250 units. Out of 500, 251. Okay. 250 again 7. How much? 1750. Is this okay? Next on what date? Next 12 April 22 again receipts. How many units?
600.
600 units at 8 rupees, sir? 8 rupees. So 4800. Now tell me, what will you balance then? 250 of 7, 1750, 600 of 8, okay, 4800. Okay, next transaction is on
14.
14/4/23
Issue.
issues. How much?
500.
500 units issued. So 500 units means what? 250 into 7 will be 1750. Okay. So remaining how many units? 350. 350. No, sorry, sir. 250 units. 250 unit from 600 lot. Okay. 250 into 8, which is equals to how much? 2000. Okay. So totally it is 3750. 500 units at 3750. So the balance will be how much? 350. 350 units at 8 rupees each. How much? Huh?
2,800.
2,800. Right. So now on 15th any transaction is there? That's all. Huh?
No.
No, that's all. So if that is the case, so now tell me what is the material cost of the material issued is equals to how much? You know total 1400 plus 2650 plus 3750. How much? 7,800 is the cost of the materials issued. So now what is the closing stock as on 14/4/23? Okay, will be how much? How much? 2,800. So 350 units at rupees 8 each. 2,800 is the closing stock. Is this okay? See here, 2,800 is the closing stock. Got it? 2,800 closing balance. Done. Okay. So now LIFO method. LIFO method. Okay. In LIFO method, all this will be same. Just what will change? Issues will change. So closing stock will change. Purchase are same. Quantity of the closing stock will be same. Quantity will be same. Quantity will be same. Right. So on 1/4/23, what is the balance? On 1/4/23, what is the balance? 100 units.
100.
No, 100 units. 100 units, 5 rupees, 500 each. Okay. So now on 5/4/23, there is 300 units purchase. So totally 100, 5, 500. Okay, 300, 6, 1800. Okay. Right. There will not be any change in the first 2 dates. Now on 6/4/23, is there any issue? 6/4/23. What is the issue?
250.
250 units. From now onwards, there will be change. 250 units. 250 units at 6 each. Earlier, what we have done? From 100 lot, we have taken. From out of 300, 150 taken. So 250 into 6, which is equals to 1500 plus. So enough. This is enough. 1500. So remaining will be 50. Sorry. 100 units of 5 each. 500 will be remaining. Out of 300. 50 units will be remaining. How much?
6.
At 6 rupees. 300. Okay, next. 500, 3,500 is the purchase. Okay, now what will be the closing stock? 100 of 5 each. 500, 50 of 6 each, 6 each, which is 300, 500 units of 7 each, which is 3500. Now on 10 423, is there any issue? How many units?
400.
400 units issue. So that will be out of 7 rupees price unit. So which is out of 500 units, 400 issue. So which is 2800 or 2800. So 100 of 5, 500, 50 of 6, 300, 5, out of 500, 400 gone, 1000 remaining, 100 remaining, 100 into 7, 7. Okay, right. Next, 600 is the purchase. So then 100 of 5, 500, 50 of 6, 300, 100 of 7, 700, 600 units into 8, 4800. Is this okay? Right. So now on 14.4, is there any issue? How many units?
500.
500 units issue. So 500 units will be out of 600 units. So that means 8 rupees each. So 5 8s 4000 4. The remaining will be 100 of 5, 500, 5 of 6 rupees, 50 of 6 rupees 300, 100 of 7 rupees 700, and 100 of 8 rupees 800. So then it will be 2300 will be the closing stock. 2300. So now what will be the cost of the material? We see 1500 plus 2800. 8300. Cost of the material will be 8300, and closing stock number of units is 350. Correct? So 350 units only. There will not be any change. But price will change. Price will change. At 5 rupees there are 6 rupees, 7 rupees, 8 rupees. If you see 100 rupee units are opening stock. On 1/4/2023 also it is opening stock. But now also it is opening stock. That means there is a higher chance that those materials will be obsolete. Coming under non-moving. Okay, those materials will be obsolete. Okay, right. So closing stock is 2300. 2300. So under the FIFO method, the closing stock value is 2800. Materials issues are 7800. Material cost. Under FIFO method, material cost is 8300 and the closing stock is 2003. So that is the difference we are getting. Is it fine? Is this okay now? All of you are done with this? Now moving on to the next part. Here in the question what they are asking us, explain why the figures in A and B in part A. A and B means what? This results which we are getting. Material cost of 8300 and closing stock of 2300 under LIFO method. Under FIFO method, what are the results? 7800, 2800. Closing stock 2800. This is 7800. Okay. So why the difference between A and B is coming? Under LIFO method and FIFO method, why the difference is coming? They are asking. So in part A of this question are different. Under these two methods of pricing of material issues used, you need not draw the stock levels there. So that means why the difference is coming? Why the difference is coming? Difference is coming due to so the valuation methods that is there, methods of valuation. At the same time, prices are in increasing trend. 5, 6, 7, 8, same material, but the prices are inflationary. Okay, so when the prices are inflationary, obviously there will be a change between the two methods. Okay, FIFO and LIFO. So when you go with the LIFO method, LIFO method, material cost will be higher. So 7800 in FIFO. In LIFO it is 8,300. So material cost will be higher. So when the material cost will be higher, profit will be lesser. So that means some profit will be shown, thereby taxes will be saved. Okay, and that too it will be more or less equivalent to current market price. That means the recent price will be taken for LIFO method. But when you compare with FIFO method, current market prices will be a little fairer. Okay, so that way under FIFO method, the valuation of the closing stock is higher and material cost is lower. When the material cost is lower, profit will be higher under FIFO method. Right. So total value of the material X issued to the production under FIFO and LIFO methods comes to 7,800 and 8,300. The value of the closing stock of material X on 15/4/23 under FIFO and LIFO methods comes to 2,800, 2,300. So this we have calculated. The reason for difference is 500. The reason for differences of 500 rupees is as shown by the following table in the value of material X issued to production under FIFO and LIFO. Okay. So on 6/4/23, 250 units issued. So under FIFO method it is 1400. Under LIFO method it is 1500. Okay. So on 10/4/23 it is 400 issue. So 2650 is the cost. Under LIFO method 2800 is the cost. On 14/4 also issue 500 units, 3750 is the cost. Under LIFO 4000 is the cost. So in all the cases under LIFO method the prices are higher. See here 1400, here 1500, here 2650, here 2800, here 3750, here 4000. So these are the differences. Okay, so as the prices are increasing 5, 6, 7, 8, the recent price is being adopted under LIFO method. So that's why this difference is arising. Okay, so hence here 100 rupees change. Next in the next case there is a change of 150 rupees and in the next case there is a change of 250 rupees which is coming for 500 rupees. 100 plus 150 plus 250 which is coming for 500 rupees. So the total which is coming as difference in the material issues will be reflecting in the closing stock obviously. Okay, right. So same is the case with material stock also. In the materials also there will be a difference in the pricing. Okay, so that is the difference. Now comes the next concept which is, see here base stock method is one such method. Here in the base stock method what will happen is we will fix the there will be a minimum quantity which will not be touched. It will be just like a safety stock. It will not be touched. So all the time it will be there in the stores. But whatever the material we are purchasing, that material will be consumed. So which that means we will one quantity of the material will be kept separate and it will be reserved. So that is what is called minimum quantity of the stock which will be stored and the price of which will be fixed. Okay, so that is what is base price method. Minimum quantity of the stock under this method is always held and fixed at a fixed price as a reserve in the stock to meet the state of emergency if it arises. So this minimum stock is known as base stock and valued at a price at which the first lot of the material is received. Okay, first lot of the material is received and remains unaffected by subsequent price fluctuation. This is what is base stock method. Minimum quantity of the stock will be maintained all the time. So there will be a price which will be the cost of the first lot. It will be untouched unless and until there is an emergency. Okay, so this method of valuing inventory is different from other methods of valuing inventory, as the base stock of the materials are valued at original cost, whereas the other materials other than the base value are valued at FIFO and LIFO. Other than base materials which are coming and going, receipts and issues, that will be valued at LIFO or FIFO, some other method. But minimum quantity which is kept aside will be fixed with valued with fixed price. So this method is not independent method as it uses FIFO and LIFO for continuous material, for rotational material. So advantages of method is dependent on the use of the other method FIFO or LIFO. Okay, and at the same time what is the material which is kept as fixed material or minimum quantity material is done, there is a chance those material will be obsoleted or expired. Okay, so next average price method. simple average. In this simple average, the calculation will be just like, so see, on 1st April we purchased 5th, 14, 21, 28. So in 5 lots we have purchased at different rates. So 10, 12, 12, 15, 11. So that means prices are fluctuating. Purchases on different dates were being made. In such cases, what is the average price? If you take means, so 10 plus 12 plus 12 plus 15 plus 11 divided by 5. So it will not consider the quantity. It will just consider the number of lots. That's all. So see here, it is 200, 150, 210, 50, 140. So this is not considered. Whatever the quantity we are purchasing is not being considered. Just the value, just the unit price is being considered in this case. So in such cases, what will happen? Obviously, when the prices are fluctuating, when the prices are more fluctuating, see, let's say it is from 5 to 15, it is being fluctuated. In such cases, the average will not give you a good result. At the same time, when you are not considering the number of units also, it will not give you a correct result. Okay, so that's why this method is not less effective, right? So, and that too, it will consider just the number of lots, not the number of units. So this is how we calculate the price. See here, 10 plus 12 plus 12 plus 15 plus 11 by 5 lots, which is equals to 12 each. Average price will be adopted for the material issues. So next, so in this, the advantages are, it is very much simple to use. Okay, for an entity which orders materials in a lot of standard quantity, as only price lot is taken to calculate the average price. In a stable price environment, it is good. That means there are lesser number of fluctuations means, and that too it will be fluctuating from 10 to 12 means it is good. Okay, so this method gives a price which approximate to the current market price. But this method does not provide right stock valuation when standard quantity for the purchase in a lot is not specified, and when the price of the material fluctuates, okay, and the entity chooses to customize the order quantity. Price of the material fluctuates from 5 to 15, then it cannot be applied. Okay, so customize the order quantity. The price under this method may differ substantially from the current market price. Right. So now comes the weighted average method. So the weighted average method of valuation of inventory means it would also take the number of units purchased in a particular lot. So then the price will be arrived. Okay. See here, issue price under weighted average price method would be calculated using this formula, which is nothing but price into quantity, plus price into quantity plus price into quantity. Like this, how many times? So for all the 5 lots we have to do like that. Okay, divided by total quantity. You need to take out the price. So that's why, so 10 into 200, which is nothing but value of the material divided by quantity of material. Thereby you are getting price of the material. Okay, so value divided by quantity you are doing. That's all. Value is nothing but summation of all the lots. Summation of value of all the lots. Okay, divided by quantity. Thereby you are getting price. So that price will be adopted for material issues. That price will be adopted for material issues. See here. So the calculation is 200 into 10 plus 12 into 150 plus 12 into 210 plus 15 into 50 plus 11 into 140 divided by 200 plus 150 plus 210 plus 50 plus 140. So this is how they have calculated. So they have arrived at 11.48 each. So this is giving weights to the number of units of the material purchased in a particular lot. At the same time, price of the material. So all the batches are taken into consideration, and one price has been taken out from that lot. Okay, so that is what is weighted average price. So this will be advantages and disadvantages. So it smoothens the price fluctuations, if at all it is there, due to material purchase. Issue prices need not be calculated. Need not be calculated for each issue unless new lot of material is received. Okay, just a minute. Hello. చెప్పండి సార్. లేదు నేను అడగను. చెప్పండి. అవునా, ఓకే ఫైన్, డన్ డన్ డన్. నేను చేస్తా ప్రాబ్లం. ఓకే, right. So disadvantage you see, material cost does not represent the actual cost price, and therefore different profit or loss will arise out of such a pricing method. So it does not, obviously it is not representing the actual cost price. So whatever the material we are issuing, no, we are taking average price out of it. So we are not giving the exact price at which we are purchasing. Okay, obviously it will not reflect the correct price. So it may be difficult to compute. Generally, every time the material issues and material receipts are there, no. So every time we have to calculate the weighted average. Okay, so that's why the computation is little difficult. Since every time a lot is received, it would require recomputation of the issue prices. So this is what is weighted average method. So we have a question on this. So let's solve it. Okay, so under weighted average method, stock taking has to be done. Okay, right. So see, simple. Just we have they have given transactions that has to be calculated. Same format, in the same format we have to calculate, but based on the weighted average method. So how to take out the price under weighted average method, that you know, no? What is that? Number of units into price per unit plus number of units into price plus per unit divided by total quantity, total number of units. Okay, right. Embryos India Limited, illustration 14 you see. Embryos India Limited is recently incorporated startup company backed in the year 2019. Okay, backed in the year 2019. It has engaged in creating embedded products and the Internet of Things solutions for the industrial market. It is focused on innovation, design, research and development of the products and services. Okay, one of its embedded products is Logmax, a system of module carrier board for industrial use. Okay, system of module carrier board for industrial use. It is a small, flexible, and embedded computer design as per the industry specifications. In the beginning of the month of September 20. So all this we don't need. Okay, we just need, so under costing we just need what is the material, what is the procurement. That's all. So what is the material they are procuring? So in order to manufacture the computer, they are preparing a component, say, okay, SOM carrier board for industrial use. Okay, right. So they are purchasing. In the beginning of the month of September 22, company entered into a job agreement of providing 4,800 log max to NIT Mandi. Okay. So following details with respect to issues, receipts, returns of the stores department handling microcontroller, a component used in the designated assembling process have been extracted for the month of September 22. So microcontroller they are purchasing. So 4,800 log max computers they have to manufacture. So for manufacturing 4,800 log max computers, they are purchasing microcontroller. Okay, which is a component used in the designated assembling process have been extracted for the month of September 22. So September 22, they are giving the details with respect to opening stock, with respect to receipts, with respect to issues. They are giving. So okay, so what is the component? Microcontroller is the component. Okay, on September 1st, opening stock is 6,000 units at rupees 285 per unit. Okay, next September 8th, issued 4,875 units to mechanical division, wide material requisition number. Okay, material, see, you know this material requisition note and all. GRN, you know, while receiving the materials, goods received note will be issued. This we have said. Okay, material requisition note is there. That means what? From stores department to from production department to stores department, there will be issued a note called these are the materials required. Okay, so that is what is material requisition note, MRN, generally material requisition note. So based on the material requisition note only, stores will be issuing that stores products to production department, raw material to production department. Right. So received. See, this is the note number 9 by 2022. Okay. So mechanical 9 by 2020. So received 17,500 units at 276 per unit, wide purchase order number 159 2022. Okay, 17,500 units received at 276 per unit. Next issued 12,000 units to technical division, wide MRN, technical 12 by 22. Received to stores 2,375 units by technical division against the material requisition number 12 by 2022. Returned. So that means what, issued on what? On 10th, on 12th, got returned. So returns will be treated as receipts only. So whatever we are receiving now, see here. So whenever we issued the material from stores to production, it shall be used in the production. If it is not used, it will be returned. If it is not used in the production, there may be a chance that they may be used alternatively. Okay, for other job likewise, that means transferring from one department to other department, from mechanical to technical to mechanical. Okay, so likewise there may be a transfer. Whenever there is a transfer, we don't consider that transaction. So whatever we are taking in the ledger, no. So in that we will not consider the transfers. We will just consider returns. So if returns are there, means how we will consider them? If returns are there, means how we will consider them? We will consider them as receipts. Okay, right. So next received 9,000 units at 288 per unit, wide purchase order number 160 by 22. Next, return to supplier. Return to supplier means so that is nothing but purchase returns. So purchase returns to supplier 700 units out of the quantity received by wide purchase order number 160 by 22. That means it is purchased in this month only, 160 by 22. This only 15th. On 15th 9,000 units purchased. Out of that 700 units of the quantity received is being returned now. Okay, so out of this order only. So that means same price has to be adopted. So return to supplier means what? Where we have to write that. Return to supplier means what? What will happen? In purchase it will be written. In issues it will be written. Issues. It shall be written in the issues column. No? So whenever it is returned from the department, production department, then it will be received. Whenever we are returning that time it will be issues. In the issues column it shall be written. Okay, next issued 9,500 units to technical division, wide MRN 160 by 20. Is this okay? Right. So on 25th September 2022, stock manager of the company expressed his need to leave for his hometown due to certain contingency and immediately left the job same day. Later he also switched off his phone. What happened? Stock manager is going on leave and later on switched off. That means he is doing something fishy. Okay, so new stock manager has come. So as the company has the tendency of stock taking means what? Counting the stock taking every end of the month to check and report for the loss due to rusting of the components. The new stock manager, okay, on 30th September 22 found that 900 units of microcontrollers were missing. Missing means obviously what? Old stock manager are there, is there, no? So he has misappropriated by the former stock manager. So he further reported loss of 300 units due to rusting of the components. 300 units due to rusting of the components. So rusting of the components is there, no? 300 units. This is what is normal loss. Okay, 900 units misappropriated by the former stock manager is there, no? That is abnormal loss. So obviously abnormal loss means what shall be done? Costing P&L. Okay, anyway we will be short of that material. It will be treated just like issues. But normal stock will be there, no? So normal loss will be there, no? With respect to normal loss, what shall be done? Cost of the material shall be increased. I mean, unit price of the material shall be increased. So that means 300 units cost, whatever will be there, no? That cost has to be adopted by the other materials. That means whenever there is a unit price of 5, so as a result of adopting this 300 units, the unit price will be changed to 6. That means such absorption shall be done. So with respect to with respect to normal loss. With respect to abnormal loss, it will be just like treated like issues. Okay. So okay, in this question we have seen some new transactions or new treatments. So with respect to returns from the production departments to store department, what shall be done? Returns from the production to stores. From production to stores, returns. That will be just treated just like receipts. Returns from stores to supplier. Stores to supplier, which is treated as issues. Okay. Next, abnormal loss. Abnormal loss will be treated just like issues. Normal loss will be absorbed. Okay. So we'll try to do this using weighted average method. Okay, using weighted average method. Okay, illustration 14. Okay, stores ledger. Limited under weighted average method. Okay, format is same. Date format is same. Okay, date we taken. Okay, date to be taken. Next, receipts. In that also quantity, weight, amount. Issues, quantity, weight, amount. Next, closing. Stock balance, quantity, weight, amount. Okay, right. So first date is 1st September 23. So what is the quantity in the opening stock? 6,000 units at rupees
280.
285 is the value. Now what is the amount? 17 lakh 10,000 is the amount. Okay, right. So now what happened after that? Issued on 8th September 23 there is an issue. Issue of how much material? 4,875 materials issue at 285 only. 285 only. Okay, so what will be the cost then? 13 lakh 75,125 will be the cost. So remaining material will be 1125 1125 will be the remaining material at cost 285 only. At cost 285 only. What is the cost? 20,625. Right? Okay. Now on the next date, what is that? 9/9/23. Purchase the receipts. How much? 17,500 is the receipt at rupees 276. Amount will be 48 lakhs 30. So now we have how much material? 11, 25 and 17,500. Now you total it, you sum it up. How much material you have? 18,625 you have. Okay. So now what will be the rate for it? So what will be the rate for it? Means first you total the amounts. So amount means what? Units into price is amount now. That is already there with us. 48 lakh 30,000 and 3 lakh 20,000. Okay, these amounts are there. Unit into price plus unit into price. So that means if you are summing up 48 lakh 30,000 and 3 lakh 20,000, you are summing up a numerator. You are getting numerator. What is that now? What is that?
51 lakhs,
51 lakhs.
15,000.
Uh,
625.
625 is the total value. Total value of 18,625 units of material. Now you take out the price. 51, 50, 625 divided by 18,625. 276.54. You got it? You got this calculation? Huh? Simply what shall be done? Amounts has to be added up. Okay, and units has to be added up. Divide the amount by units. Then you will get per unit value. You got it? 276.54. You got this, sir? Simple formula. Right. Next, on what date? Next date, September 10th. What is the transaction? Issue 12,000 units, sir. Okay, 12,000 units. Obviously, price will be 276.54. 276.54. 33 lakhs.
18,000.
33 lakhs 18,480. Okay, so this is the value of the material issued. So remaining balance will be how much? 6,625 at 276.54.
18 lakhs, 32,000.
18 lakhs 32,000.
18 lakhs, 32,077.
077. Got it? Right. What is the next transaction? On 12/9/23 purchaser returns to stores. Returns to stores means what? Receipts. How much? Out of what material it is returned? Out of this 12,000 only it is returned. So how much?
2,375.
2,375 returned at 276.54. How much? Two three seven five into
56,000.
6,56,782. Okay. Right. So now what will be the closing? 9,000. 9,000. 6,625 plus 2,375. 9,000 at 276.54. What will be the total? 9,000 into 276.54.
24 lakhs 88,860.
24 lakh 88,860. Yeah. 24 lakh 88,000. Okay. Right. Next.
Received 15.
Received on 15/9/23. How much?
9,000.
9,000 units at rupees 288. Then what will be the cost? 92,000. So 25 lakh 92,000. So closing stock will be 18,000 units. Correct? 9,000 plus 9,000. What will be the price then? So you add up 25 lakhs 92,000 plus 24 lakh 88,860. 50 lakhs 80,860 divided by 18,000. Divided by 18,000. How much? 282.27. Okay, right. What is the next transaction? Return, sir. Return to supplier on what date? 17/9/23. Out of what material?
9,000.
Out of 9,000 units. So out of 9,000 units. See,
700 units.
out of 9,000 units, correct? Out of 9,000 units, 700 units are being returned, correct? Return to supplier 700 units, wide purchase order number 160/22, right? So that means out of this 9,000, whenever you are returning, no, at what price you have to return? At what price you have to return? Purchase price, invoice price. Now, what is the invoice price? 288 is the invoice price. Okay, so 700 issues, 288. Then 20,000, 2 lakhs, 2 lakh 1,000, 2 lakh 1,600. So 2 lakh 1,600. Then remaining units will be how much? How many? Remaining units 18,000 units are there. Out of that 700 units has been gone out. Okay, 17,300 will be the remaining material. Okay, will be valued at 282.27. How much? $17,300 into 282.27. 48,83,271. Okay. What is the next transaction?
Issued at
How much? What date? Date. 20th, 29. So issues are how many units? 9,500 issues. So out of 17,300, 9,500. At what rate? 282.27. What will be the price? 9,500 into 282.27. 26 lakh 81,560. Okay, remaining units will be, you take out 9,500 from 17,300. 7,800 at 282.27. What will be the price? 2 lakhs 706. Next, what is the transaction? 22 completed, done, na?
Yes.
Okay. No, we have this thing, no. What is that? Abnormal loss is there, no?
Yes.
No, what is that? September 30th September. Abnormal loss is there. How many units? 900.
900.
900 at 282.27. How much? Two lakhs. 043. Okay. Remaining units will be 6,900 at 282.27. 6,900 at 282.27. What is the price? What is the value? What is 660? Okay. Right. Next, what happened? Normal loss. In stock taking, we got to know Okay, 300 is the normal. So 300 rupees, 300 units of materials are there. So for this, we have to observe the cost. How we will observe 6,900 units? Okay, so out of that 300 units are normal loss. So remaining units are 6,600. Cost is, so total value is 19 lakh 47,663 divided by 6,600. 1947 to 95.1. So 295.1 will be the cost. Unit price of the closing stock. So this is what is called absorption. Absorption of normal loss. Absorption of normal loss. Got it? So this is the closing stock. Here in this question, we have 4 different transactions. What are those? What are those? Returns.
Returns.
Okay, returns of how many units? 2, 3, 7, 5 units are from purchase to, so from production to stores. Okay, and returns of 700 units from stores to supplier. And lastly, we have abnormal loss 900 units, normal loss 300 units. So these are the 4 different points in this question. All these points are understood? Okay, right. So 900 units is the abnormal loss, hence it will be transferred to costing, profit and loss account. Okay, right. And 300 units is normal loss, it will be absorbed by the good units. We have a slight variation of 1000 rupees. Okay, maybe in decimals. Done. Okay, so that means all the questions under the concepts has been completed, but under practical questions we have some case study questions and all. We'll see. So just for this, can you tell me the answers for this MCQs? So direct material can be classified as fixed cost, variable cost, semi-variable cost, prime cost. Direct material can be classified as direct material. Direct material means what? Use it for production directly. So that means when the production increases, consumption of this material, need of this material will be increased. That's all. That is the direct material. So that is what cost? Fixed cost. All this is gone. Like we are studying from last 7 days, so that is gone. Fixed cost, how can you say that is a fixed cost? Variable cost. So which changes with the volume of production is called variable cost. Material, direct material cost is variable cost. Okay. Prime cost means what? Direct material, direct labor, and direct expenses are summation of those 3 expenses are prime cost. Okay, right. Variable cost means which changes with the volume of production, which directly linked to the production, direct variable cost. Right. Next, in most of the industries, the most important element of cost is, obviously we are studying material cost. That's why you are telling. Otherwise, after 3 chapters, I would have asked means material only. So if that time we are telling material means it makes some sense. Now it is bonus. Okay. Which of the following is considered to be normal loss of materials? Normal loss of materials. Okay. Loss due to accidents. Abnormal. Pilferage. Pilferage. Abnormal. Loss due to breaking the bulk. Breaking the bulk. Normal loss. Loss due to careless handling of materials. This is also abnormal. Okay. In which of the following methods of pricing costs lag behind the current economic values? Current economic values means current market price. Lags behind current market price. Still best. Okay. Replacement price we have discussed no? Replacement price yesterday. Replacement price. Under market price method, standard price, market price method is there. So under market price method, we have standard price and replacement price. Okay. So whatever will be the fluctuation in the price, there will be a price which will be determined based on the purchase price, based on the current market price and all. There will be a price which will be predetermined. That is called standard price. One thing. And replacement price means we have taken the example of this pen. Okay, replacement price. At what price we need to purchase the material now? Whatever the price it may be at the time of purchase. Okay, so replacement price means what? Now if you are going to purchase, at what price you have to purchase, that is what is replacement. Both will be under market price method. Okay. Next question is continuous stock taking. Stock taking means what? Just now we discussed. Stock taking, staking means what? Counting the stock, closing stock. Okay, is a part of what? Annual stock taking, staking, a perpetual inventory, ABC analysis of bin cards. Just a guess. Perpetual inventory means what? Continuous inventory. Okay. Annual stock taking, perpetual inventory, ABC analysis, bin cards. Bin cards means nothing but just there will be some vessel for storage, some vessel or some beaker for storage. So there will be some card attached to that. So what is the quantity? Okay. What is the material? What is the price and all? That is nothing but bin card. Okay. Right. You tell me. Continuous stock staking is a part of perpetual inventory. So which of the following methods issues of the materials are priced at predetermined rate? Standard price method. Okay, when material prices fluctuate widely, the method of pricing that gives absurd results. Simple average. Okay. Right. When prices fluctuate widely, the method that will smooth out the effect of fluctuation is weighted average. Next, under FSN system, FSN is fast, slow and non-moving system of inventory control. Inventory is classified on the basis of what? Volume of material consumption, frequency of usage, criticality of the item of inventory, value of the items.
Frequency of usage.
Okay, fast, slow. Form used for making a formal request to purchasing department to purchase the material is. To purchase the material is. Form used to make a formal request to the purchase department to purchase the material is. Purchase requisition note or material requisition note. Purchase or material. Purchase requisition note we have discussed. Only material requisition note only we have discussed. Okay, material requisition. Right. So we have done with in practical questions. How many questions we have done? Purchase requisition note we have discussed. Purchase requisition note. See, we have one chart also. In the starting we have, in the starting itself, this thing. Here you see there is a purchase requisition note. See here. So from purchase to, sorry, from production to purchase department, purchase requisition note will be sent. From production to stores, material requisition note will be sent. Okay. Right. Now coming to how many questions we are. Okay, 7 questions done. Huh? So now we'll take up 8th question or ninth question you see. 9th question you see. The following information is extracted from the store's ledger. The following information is extracted from the store's ledger. Okay. Material X opening stock is nil. Purchase on 1st January, 20th January. 100. Rupees 1, rupees 2. Issues on 22nd January, 23rd January. 60 for job W60, 60 for job W70. Two different jobs, two different issues are being made. 60 rupees, 60 units, 60 units. Complete the receipts and issues valuation by adopting FIFO, LIFO, weighted average. Receipts and issues valuation by adopting FIFO, LIFO and weighted average. Tabulate the values allocated to jobs 16, 70. That means what they are asking for. For job 16, what is the material cost? For job 17, what is the material cost they are asking? Okay, under all the methods. Under LIFO method, FIFO method, weighted average method. Okay, and the closing stock under the methods are foresight. Okay, under LIFO, FIFO and weighted average, what will be the closing stock? Okay, ultimately our answer will be what? FIFO, LIFO, weighted average. Okay, first they are asking for material cost under FIFO, under LIFO, weighted average. Next they are asking for, see, material cost for job 16, job 17. So, and the third point is closing stock. Also they are asking under FIFO, LIFO and weighted average. Okay, so this is the answer which we have to give. Right. Can we start doing it? Material X. Practical question 9. Okay. Okay, date. Okay, date. Issues, receipts, quantity, rate, issues, quantity, rate, amount. Okay, closing quantity, rate. Okay, so on first Jan. So what is the receipt purchase? 100 units at rupee 1 each. Amount 100. So closing will be 100, 100. Okay, on 20 Jan,
Yes.
20 Jan. 100 units again at rate 2, 200. So 100 to 200. So this is under LIFO, will say. Sorry, FIFO. Okay. So now 22nd day. 22nd day. What happened? Okay. 100, 100 to 200. Okay. So now on 22nd Jan, what is the issue? 60 per job. Job 16. 60 units. Okay. So 60 units. So under FIFO, no. So okay, rate will be 1. Amount will be 60. Okay. So closing will be 40, 1, 40, 100 to 200. Next 20 date 20, 23 Jan. Job 17. Okay. So what is the issue? 60. So out of 40, 1, 40. Out of 100, 20 to 40. So total 80. So closing stock will be 80 to 160. Okay. So that means what is the material cost? Cost of issues is equals to 140. Closing stock is equals to 160 under FIFO. Is this okay? Right. So next case. Next case is what? LIFO. Under LIFO. Okay. Here you see. We'll draw this table. What is that? FIFO, LIFO, weighted average. Okay. Material cost for job 16, job 17. What is the material cost under FIFO for job 16? 140. Okay, right. Next, closing stock. Closing stock. Okay. Job 16, what is the cost? 60 rupees. 60. So 60 rupees. Job 17, 80 rupees. Closing stock 160. Is this fine? So now comes. So first transaction is same for LIFO. We will go with the LIFO. LIFO. Okay, first two transactions are same. Third one we have to change. Okay. Right. Okay. So now issues for job 16. How many units? 60 units, sir. See, this first Jan, 28th Jan, these are same, just purchase. On 22nd Jan, there is an issue for job 16. How many units? 60 units.
60.
So 60 units into 2 are 120. So remaining stock will be 100 into 1, 100, 40 into 2, 80. Okay. Next issue for job 17, 60 units. How it will be? 40 into 2, 80, 20 into 1, 20, which will be totally 100. So remaining stock will be how much? 80 into 1, 80. 80 into 1, 80. Do you got this? Right. So what is the closing stock? 80. What is the cost of the material issues? 220. Correct? 220. So under LIFO method, material cost for job 16 is 120. Material cost for job 17 is 100. Closing stock is 80. Closing stock is 80. Is this okay? Is this okay?
Yes.
Right. So now comes weighted average. So if you take weighted average, what will change? This valuation will change, closing stock. Okay, this also will change. Okay, so now tell me, after the second purchase on 20th Jan, what will be the cost? What will be the cost? Balance 200 units, correct? 100 plus 100, 200. Total amount will be 100 plus 200, 300. Then what will be the cost? 1.5. Okay. 200 plus 100, 300 divided by 100 plus 100, 200. Okay, 300 by 200, you are getting 1.5. Okay, now 60 units of material is being issued. Correct? 60 units. So, rate 1.5. So, amount will be 90. Remaining will be 140 units at 1.5, which will be equals to 210. Okay, next for job 17 issue is 60. Again 1.5, 90. Remaining units 80 at 1.5. Is this okay? Okay, 120. So closing stock is 120. Material cost of issues is 90 plus 90, 180. Okay, so material cost for job 16 is 90. Material cost for job 17 is 90. Closing stock is 120. In all this, if you see, total cost will be 300. That will be same. Total cost is equals to 300. That will be same. This is the answer. Understood? Okay, where?
So the issue is to return to suppliers and
What is, we have to take invoice value.
the balance of stock is price.
Illustration photo. So this returns 288 we have to take. This is correct, no? Remaining? This we have taken 2.7. Okay, this shall be the remaining value 50 lakh 80,928 minus 2 lakh 1,600 divided by there you will get 282.04. That is the difference, sir. You see? No. It is not just because of that, I think. because it is already different from this way, this also. This also we got difference. Here this value. This is 24, 88, 928. There it is in our answer. 88, 860. Here also there is a difference. So up to here there is no rate difference, no. If there is no rate difference, there is not an issue. But here this is the important thing. Like it should be 282.04 only. Okay. So how we will get this? To calculate 50, 80, 928 minus, take out 2,01,600. So what is the difference? 48, 79, 79, 328 we are getting, divided by 17,300. Simply reverse calculation. Just to value. So generally we will add up the values. Here we are just subtracting the value. So whatever we are issuing, that we were subtracting and then getting the average price. Okay, and then getting the average. See, 18,000 minus 700, you will get 17,300 units. So total value 50,80,928 minus 2,01,600. So you will get this value 48,79,328 divided by 17,300. You will get this value. You are getting it? Huh?
Yes.
You are getting it? Okay. So this is important. So this has to be corrected in our answer. This has to be corrected. So even though there is a difference in decimals and difference in some thousands, 500 or 1000 is not a problem. But this is very much important. Okay, it should not be that different. Okay. Right. Okay, now we will take up question number. See, we have case scenario question here. Case scenario question where we will be asked with 5 MCQs. 5 MCQs. Sir. See, eighth question. Question 8. Question 8 is same only. AT Limited furnishes the following store transactions for September 22. Opening balance given. Issues, receipts, issue, return. Returns given. Issues, returns, receipts, issues, received, replacement from B and company. Return from department, material of M and Co. Transfer from job. See, transfers we need to ignore. You know how to deal with returns. Okay, returns from department means what to do. It is just like receipt. Returns from department to department. See, from job to job it is transferred. That we need to ignore. Okay, issues transfer from department A to department B. This has to be ignored. Shortage in stock taking means shortage in stock taking. That is loss. Loss has to be done. What has to be done for loss? See, if it no. So if it is normal loss, absorption. Shortage means abnormal loss or normal loss. See, shortage is not normal. Just like pilferage. Shortage is not normal. Bulk breaking is normal. Or some deterioration or rusting is normal. Rusting is there now. So in the last question we have seen rusting. That is normal. Stock taking we have lost 2 units means that is not normal. Okay, so in place of 2 units it might be 20. Okay, that is not normal. So stock taking, shortage in stock taking 2 units, 2 units that has to. So these treatments you know. So you try this question. Okay, same only. Right. So this case study we will solve. So this is a different question. This is a different question. This type of questions can be expected in exam. Okay. See here, Purchase Committee of A Limited. Purchase Committee of A Limited has been entrusted to review Purchase Committee of A Limited has been entrusted to review the material procurement policy of the company. So A Limited company is there. Okay. So in that there is a purchase committee. So which has been given with a job to review the procurement policy of the company how the company is procuring the materials. That has to be reviewed by the purchase committee. Chief marketing manager has appraised the committee. Chief marketing manager has appraised the committee that the company at present produces a single product X by using two raw materials A and B in the ratio 3:2. In the ratio 3:2. That means what? So for producing 1 unit of X, we need two raw materials A and B, and that too 3:2 ratio. That means if you are taking 5 kg of raw material, so 3 kgs of A is required, 2 kgs of B is required. Is this okay? Okay, 5 kgs of raw materials are there. In this 3 kgs of A is required, 2 kgs of B is required. Is this okay? Right. So next, material A is perishable in nature. Perishable in nature. That means it will be expired immediately and has to be used within 10 days. That means the expiry date is 10 days. Right from the goods received note date. Whenever we are receiving the goods, from that date onwards, it will be, so it will be, otherwise material becomes obsolete. Material B is durable in nature and can be used even after 1 year. Okay, material A is purchased from the local market within 1 to 2 days of placing an order. So that means minimum is 1 day, maximum is 2 days. What is this? What is this? Lead time. Pre-order period or lead time. 1 or 2 days. Material B on the other hand is purchased from the neighboring state. Okay, and it takes 2 to 4 days to receive the material in the store. Okay, minimum is 2 days, maximum 4 days. So the purchase price per kilogram of raw material A and B is 30 and 44 respectively, exclusive of taxes. So the A is given, B is given 30 and 44. Price. To place an order, the company has to incur an administrative cost of 1200. What is this? Ordering cost O. How much? 1200. Okay. Carrying cost of material A and B is 15% and 5% respectively. What is this? What is this? Carrying cost is C. Carrying cost per unit per annum. 15% of 30 of A. 5% of 44. This will be the carrying cost. Okay. At present, the material A is purchased in lot of 15,000 kgs. That means how many units we are placing as an order? 15,000 units. Okay. To avail 10% discount on the market price. That means they are not. This is reorder quantity is 15,000 kg. They are telling. They are not telling that this is EOQ. So EOQ is different. Okay, 15,000 kgs they are placing as an order. Okay, so that means what? They are availing discount of 10%. That means at what price they are purchasing? 30 minus 10%, 27 rupees. At 27 rupees they are purchasing. That's why they are ordering 15,000 kg. Okay. So GST applicable for both the materials is 18% and input tax credit is available. Input tax credit is available. That's why our price can be exclusive of GST. So that's why it is given exclusive of taxes. Even the exclusive of taxes also, that has to be considered. We don't need to consider the tax because it will be given as credit. Is this okay till now? Question is clear? Okay, A limited is there. Purchase committee has to review the purchase policy, procurement policy. So the chief marketing manager is giving the information to the purchase committee that A is to B has to be used, A and B has to be used for production. So A is to B will be 3:2. Okay, A is perishable in nature, 10 days will be the validity period. Within 10 days, it will be expired. Okay, now B is not like that. It will be, so it will be having expiry period more than 1 year. So, and lead time is given for A 1 to 2 days, lead time for B is 2 to 4 days. So purchase price is given for A and B. A is 30, B is 44. Ordering cost is 1200. Carrying cost is 15% and 5%. Okay. And at present, A is purchased at lot of 15,000 kg. In order to have a discount of 10%. So that means we can get it at 27 rupees. Okay. So GST credit is available to. So this is the summary. So for what we are studying. See, whatever the question you are studying now, you should be having these facts in your mind. So line to line, you have to you have to closely read the question, and then you should be having the information in your hand. Okay, right. So when the well-defined question is half solved, Okay, so that's why you have to define the question for yourself. Next, sales department provided an estimate that the company could sell 30,000 kg in January 24. That means what? Monthly production is 30,000 kg. Monthly 30,000 kg. And also projected the same trend for the entire year. That means what? Every month 30,000 kg production will be done. So every month 30,000 kg production means what? 30,000 into 12. How much? 3,60,000 kg production will be made. 3,60,000 kg production will be made. And input output ratio is given 5:3. That means what? Input output ratio is given 5:3. That means what? So when you are giving 5 units, you are getting 3. Let's say 5 kgs you are putting as input means you are getting 3 kgs of output. So that means what here? 30,000 kgs we are getting. 30,000 kgs. That means input will be 50,000 kgs. Okay. Is this okay? 30,000 kgs we are having a output. So the input will be 50,000. So this 50,000 kgs is total input. Okay. Out of this total input, correct? Out of this 5:3 is sorry, how much? 3:2. 3:2 is the ratio of A and B. So that means A is 30,000 kgs, B is 20,000 kgs. Is this okay for you? Correct? Okay. Right. So the ratio of input and output is 5:3. Company works for 25 days in a month, and production is carried out evenly. Production is carried out evenly. Production is carried out evenly means what? Per day, what is the requirement? Per day, what is the requirement? Per day, what is the requirement? We need how many units? 30,000 units? 30,000 or 50,000? How many units we need? Input 50,000. Input only we have to take. We are not concerned with output. Why? So that is the result. We know we are not concerned with output. So input only we have to see. So in that A is 30,000, B is 20,000. So what is the requirement of A per day? Requirement of A per day. 1200 units per day. How? 30,000 divided by 25. What is the requirement of B? 800 units per day. Is this okay? Right. So the following queries are calculation to be kept ready for purchase committee. So purchase committee is in need of other information. Okay, what is the information? 1, 2, that is our question. So that means we are giving information to purchase committee. Okay, so by answering these 5 questions. So what is the first question is, for the month of January 24, what would be the quantity of material to be requisitioned for both material A and material B? How much is A, how much is B required for the month of Jan 24? 30,000? 20,000. That is solved. Is this okay? Clear up. Next, economic order quantity for both material A and B they are asking. What is a EOQ? Okay, we'll do it. So EOQ of material A. EOQ of material A is equals to 2AO by C under root. Is this okay? 2 into what is the annual demand? What is the annual demand of A? Annual demand. Annual demand. So 30,000 units of A is required for a month. For a month, is this correct? Is this correct? So that implies annual demand of A is equals to how much? 30,000 into 12, which is 3,60,000. Is this okay? Right? Okay. Next, ordering cost is equals to O, which is 1200. 1200 per order. Next, carrying cost per unit per annum is equals to how much? Rupees 30 purchase price into 15%, which is 4 point. Is this okay? Right. So which is equals to 2 into 3,60,000, okay, into 1200 divided by 4.5 under root. How much? 13,860.4 units. This is EOQ of A. Okay? Right. Next, EOQ of B. 2AO by C under root. So what is the annual demand of B? Annual demand of B is equals to 2,40,000. How? 20,000 into 12. 2,40,000. Okay, got it. Next, ordering cost O is equals to anyway 1,200. Okay, carrying cost CCPU C is equals to how much? Rupees 44 into 5%. 2.2. So now you solve 2 into 2,40,000 into 1,200 into 1,200 divided by 2.2, which is equals to 12,000 or 16,180 units. This is EOQ of B. So what is the option? First option, 13,856 we got, a 16,818 we got. Okay. Next, what would be the maximum stock level of material A? They are asking. Maximum stock level of material A. What is the formula for maximum stock level? Maximum stock level of A. So what is the maximum? RO Q plus L minus minimum consumption into minimum lead time. What is that? ROQ we have a EOQ is ROQ. In the question they are telling that 15,000 no. Reorder. They are doing 15,000 units of order. No? They are placing an order of 15,000 units. So 15,000 units plus ROL reorder level. ROL is equals to what? Maximum consumption into maximum lead time. What is maximum consumption? What is the consumption? ROL. What is the maximum consumption per day? Per day, how many units they are consuming? 30,000 divided by 1,200 into maximum lead time is 2 days. 2,400 will be ROL. Minus minimum consumption is also same. 1,200, correct? Into minimum lead time 1. So then 16,000 units will be the maximum stock level. But here we are getting 16,200. See, goods are perishable in nature. Okay, so that means perishable in nature, and that too expiry date is 10 days.
Yes.
So each day we can have, we used to have 1200 units. So into 10 means 12,000 units. So if you keep 12,000 units in our hand, then at the 10th day, the last 1200 units will be used. So there will be no loss due to expiry if it is 12,000 units. So obviously, what will be the maximum stock level then? 12,000 or 16,200, whichever is lower, will be the maximum stock. Do you understand this point? I'll repeat again. See here, 16,200 is the formal calculation as per the formula, maximum stock. But here material A is perishable in nature. So it can last maximum up to 10 days. For each day we need 1200. So 10 days stock can be maintained, that's all. More than 10 days we cannot maintain. Why? After that it will be perishable. So that's why only 10 days material. That means 1200 into per day usage, 1200 into 10, which is 12,000. So 12,000 or 16,200, whichever is lower, will be the maximum stock level of A. So what is the answer now? 12,000. Okay, 16,200 is the calculation. Now fourth question is, calculate saving or loss in purchase of material A if purchase order quantity is equal to EOQ. So now what they are doing? What they are doing now? 15,000 units they are placing. Correct? Huh? So here purchase order at EOQ. Okay, purchase order at EOQ. Next, purchase order for 15,000 cases. Purchase order for 15,000 cases. Okay. So now tell me, how many units they have to purchase? Purchase price. How many units they have to purchase? How many units? 3,60,000 units only they require. Okay. But if you see here, whenever, see what is the EOQ for A? What is EOQ for A? We have calculated 13,856 units. What is general ROQ? 15,000 units. In both the cases, what will happen? If you are ordering this much, what will happen?
Yes.
See, if you are, in the last question only we have fixed a maximum level. How much? 12,000. It cannot be more than that. If it is more than that, what will happen? It will be perishable. So that means you are putting an order for 13,856. What will happen? 1,856 units will be perishable. This will be loss. Okay. In this case, what will happen? 3,000 units will be perishable. 3,000 units will be perishable. Okay. Right. So that means how many orders has to be placed? How many orders has to be placed? See here, 3,60,000. Each order will be placed at 13,856. Correct? Huh? How many orders has to be placed? Huh? 25 orders has to be placed. Huh? Okay, 26. Okay. Next, in this case, 15. So 3,60,000 is there. Divided by 15,000. Huh? 24 orders has to be placed. So if you are telling like this, it is wrong. Why it is wrong? Even if you purchase 15,000 units, how many are being used? 12,000 only being used. So that means for remaining 3,000 units, we need to make a fresh order, right? So that means in the next lot, whenever you are purchasing 15,000, so it will be used. How many will be used? 12,000 only will be used. So obviously in order to have number of orders, so what shall be the denominator? 12,000 units in both the cases. Okay, so here also there is a loss, here also there is a loss. So that's why 12,000 is the maximum quantity which will be used. So that's why what will be the order or number of orders? 3,60,000 divided by 12,000. Here in this case also 3,60,000 divided by 12,000. Okay, if say the ROQ is 10,000, if ROQ is 10,000, then what will be the number of orders? 3,60,000 divided by 10,000. If it is lesser than 12,000, then it will be that amount. That units only has to be taken. If it is more than 12,000, 12,000 only. Okay, why it is like the perishable nature? Okay, so that's why how many orders? 30 orders, 30 orders. So ordering cost will be based on 30 orders. Okay, carrying cost, carrying cost, carrying cost will be. See, what is the, see, we have to differentiate between these two, correct? See, if we are going for this now, we are opting for this now. So now we are going for this. So in this, what will be the differences? There will be difference in perishable units. Okay, here the perishable units are 3,000. Here the perishable units are how many? 1,000? 1856. This is the amount of loss. Okay, that is one thing. Here the price difference is 27. Here the price is 30. That is another difference. First difference is this. Second difference is this. Here the ordering costs are same in both the cases. Ordering costs are same because 30 orders, 30 orders, and there is no per order cost. There is no difference between per order cost. So the here also 30, here also 30. But here there is a difference. Okay, and fourth, carrying cost. Okay, carrying cost is also different. Why? Purchase price is being changed. So that's why carrying cost will change. Okay, so these are the ones. So summation of this, you will get some value. Difference of these two, you will get as profit or loss. You will get as for profit or loss. So that is the thing you have to solve. Okay, we'll see. This is question 4. Another question is also there. What is the minimum stop loss? See here, annual consumption is 3,60,000 kg, 3,60,000 kg, correct? Okay, how we got it? 30,000 per month. How you got 30,000? Ratio. Okay, so for 30,000 output, we need to give 50,000 input. In that also 3 is to 2. So 3 is to 2 means for 3 ratio 30,000 is the input. Is this okay? Okay, right. Next, number of orders. Number of orders. Okay, 3,60,000 divided by 12. Okay, here also 3,60,000 divided by 12. Why 12,000 has taken? Perishable nature. Okay, more than that perishable. So that's why 30 orders, 30 orders. Ordering cost is 36, 36. This is same. Carrying cost you see, 15% of 27 for 15,000 cases. Okay, here 15% of 30. 15% of 30. Okay. Purchase cost if you see 27 into 3,60,000, 30 into 3,60,000. Is this okay? Okay. Next, loss due to obsolescence. Obsolescence means what? Perishable. How many units will be perished? 3,000 per month. No, sorry, per order we will lose. 15,000 if you place, 3,000 per order we will lose. For 30 orders, how many you will lose? 30 into 3,000 you will lose. 90,000 units you will lose. 90,000 into 27 discounted price. Okay. Right. So if you total all this, you get 1 crore 22 lakhs is the cost. So if you go for this option, you have 1 crore 25 lakhs. So if you are going for EOQ, you will lose another 3 lakhs, 3 lakhs, another 3 lakhs, another 3 lakhs, 20,000. 3,21,200. You understand this question? Okay. So loss of profit. Loss of profit. Loss of profit. You are not following here. Loss of profit. See, currently they are going with 15,000 kg. If you are adopting EOQ, what will happen? They will incur a loss of 3 lakh 21,000. You understand all the elements of this. So there is a difference in number of orders. So there is no difference in number of orders. Even though ROQ is changed, there is no difference in number of orders because of perishable in nature. Okay, maximum 12,000. And next carrying cost there is a change because there is a change in the price, discounted price. That is in EOQ, at EOQ 30 rupees, at ROQ of 15,000 kgs it is 27 rupees. That is different. Purchase cost is different, carrying cost is different. Number of orders will be same. And last due to perishable nature, that is obsolescence, is different. Obsolescence is at ROQ of 15,000 kg, obsolescence is 3,000 per month. That means 3,000 into 30, which will be, 3,000 per order. 3,000 into 30 will be 90,000 into 27, which is the purchase price. Same is the case with EOQ also. EOQ, how many you will lose? 1856 you will lose into 30 number of orders into 30 rupees. So that you will lose. So totally difference is there. No? So that difference will be profit or loss. So we are incurring a loss if you go for EOQ option. So the current option is better. Compared to EOQ, the current option is better. Okay. So answer, if you see the answer. This is 3,21,201 is the loss. Calculate saving or loss in purchase of material if purchase order quantity is equal to EOQ. If you go for EOQ, loss will be 3,21,201. So now you tell me what would be the minimum stock level of material A. What is the minimum stock level? Minimum stock level. ROL minus average consumption. What is the average? ROQ by 2 or what is the average? ROQ by 2. So some notes has been written here, you see. Since the material gets obsolete after 10 days, the quantity in excess of 10 days consumption is, that is 12,000 kgs are wasted. So quantity in excess of 12,000 kgs are wasted. Hence after 12,000 kg a fresh order needs to be given. Carrying cost incurred on average stock of materials purchased. The excess quantity of the material becomes obsolete and loss has to be incurred. That is it. Next, minimum stock level of A is equals to reorder level minus average consumption minus average consumption. So which average consumption is ROQ by 2, or you can take this average consumption into average lead time. So what is average consumption? 1200 per day into lead time is 1.5. So 1 to 2 days now 1.5. So 2500 is the reorder level. 200 400 2400 we have seen. 2400 minus 1800 and 2400 minus 1800, which is equals to 600 kgs. So 600 kgs will be your minimum stock. Okay, reorder level 2400 is already consumed. So this is 1200 reorder period. Fine. Okay, so this is the answer. We got 600, no? C is the answer. Got it? So with this, we have done with all the questions of material cost. So 14 illustrations we have solved. Okay, 9 practical questions and 1 case study question. And all the answers that we have seen. Okay, great. So we have done with material cost. In this, the most important concepts are EOQ. Okay, so inventory controls. In that inventory control, setting the quantitative details is one such control. So in that we have seen minimum stock level, maximum stock level, reorder level, minimum, maximum, pre-order level, reorder quantity, where ideal pre-order quantity is equals to EOQ, and then we have seen danger level, buffer stock. These are the things we have seen. Okay, so after that we have discussed in that EOQ we have seen. After that we have discussed stock out. Okay, stock out means what? In some cases of emergency, there may be a sudden demand. So, in order to meet that sudden demand, so we need to maintain some stock, which is called safety stock. Generally, it is over and above the minimum stock level. So, if the ROQ is maintained at maximum lead time into maximum consumption, then in such cases, it will cope up with that requirement. Okay, so that safety stock level. So, if this safety is maintained, sometimes we may what we call satisfy the demand. Sometimes we may not satisfy the demand. So some cases we may not satisfy the demand, but there will be a probability for that. So not based on the absolute values, we will take the decision. We will just take the decision. We will calculate the stock out cost based on the probability of having that event or having that demand. Okay. So stock out cost and ordering cost. Carrying cost. So both has to be taken into account for making a decision how much stock has to be maintained as a safety level. So there you will see only the excess carrying cost. Obviously the average carrying cost will be there, already will be taken. That is just like historical cost, which is not part of the decision making. Just you have to see what is the stock out cost and what is the carrying cost in excess of the average. So after that we have seen after stock outs we have seen analysis, ABC analysis. So that is nothing but a classification of the inventory. Okay, based on the frequency of issues, based on the usage, value, and volume. Okay, so and based on just the price. So we have ABC analysis, we have fast, slow, and non-moving items. We have vital, essential, and desirable goods, and we have high, low, medium, low value goods. So based on the price just. Okay, so in that also we have seen some numerical questions where we are going for categorization as A and B and C. So this we have seen. Later on what we have done, inventory valuation, that is nothing but material issue valuation of material issues. So there you have seen FIFO method, LIFO method, simple average, weighted average we have seen. And market price method is also there, where we are talking about standard price and market price, replacement cost, market price or replacement cost. Okay, LIFO method, FIFO method, and weighted average method, we have seen problems where there is a standard format. What is that? Just receipts or purchases, issues, just like a account, just like a ledger. So if you make a calculation, then there is no chance for what we call this thing. There is no chance for mistake. Okay. Later on, we have seen this what we call perishable in nature. So this is the different model. So remaining models are common. This is a different model. So where the goods are in perishable in nature. So when you are placing an order of the raw material, but that will be lost for only 10 days or 15 days or 20 days or whatever. So based on, see, this is very much important. This is the recent what we call insertion made by the ICI. Okay, on perishable. So we may expect a question from this area. Okay, and that too a blend, a mix of this. So EOQ they are mixing with other maximum, minimum cost and all. Okay, and that too perishable. So there is a higher chance for coming this type of questions in the examination. Okay, so if this is missed in one attempt, it may come in next attempt. That thing we can, like if we see just before your attempt it is coming, means there is high probability that it will not come again. In the very next attempt it will not repeat. So whatever the questions in your last attempt, in your very last attempt will be there, no, that questions you can knock off. Okay, so from the 118 marks paper, you can just expect not more than 4. Okay, so that time, so almost 20 questions, 25 questions will be there in the paper. So that questions we can know. Okay, right. So higher chance that if at least one attempt has been jumped, no, passed, no. So in that attempt it may come. Okay, that means not just the very last attempt. Before last attempt, if it is continuous, there is a chance that it is coming in your return. So like this. So this is the most important question. So perishable nature is there means, so how to solve that we have seen. So this is all about material cost. There are here and there are other theory parts where we will discuss later. Okay, theory parts we will discuss later. So this is all about material cost. We will wind up this session. So in the next class we will be starting with the labor cost.